Hi, welcome to Market Update for April 19th. Well, the market is really focused on two things these days, and we talked about it a little bit the other day. One, of course, is earnings, and we're right in the beginning of earnings season, and the second is the Fed, and we saw a little bit of that with the beige book that was released today. Now, with earnings, understand that, remember, that we are looking for certain things that are already priced in the market, so disappointments are going to be taken very traumatically as far as the market pricing is concerned. And we did have a couple of disappointments, very large disappointments at that. One being Goldman Sachs, and the other one, of course, being the action that we saw around IBM. Now, this tells you that we're probably going to see a mixed picture over the course of these next few weeks. Now, what does that mean for traders and investors? Well, understand that they're, again, looking for that 10% growth year over year in these numbers. So, as these numbers come out, what you will see are these models, these algorithmic models, start to reprice their stocks and the entire index accordingly. So, let's pay attention to some of the trauma that falls into the marketplace that follows these earnings releases over the course of these next couple of weeks. Now, the other thing, of course, is the Fed. And that beige book release that we saw today is indicative of a Fed that is waiting to see certain things happen. Now, on the one hand, the interest rate quadrant is telling them that the Fed does not need to do a thing. On the other hand, certain economic releases, unemployment being one of them, are telling them that the market is getting a little hot and the time is right for the Fed to start normalizing. This debate is being played out, and it's being played out very, very dramatically, especially when you're looking at the yield in the 2-year or in the 10-year. Both of those markets are acting in a very irregular type of fashion. So let's pay attention to all of this action. It'll give us an idea of not only how earnings are going to come out, but more importantly, how the rest of the market's going to digest those numbers. This is Jack Berugian from the CME Group in Chicago.